Standard & Poor's downgraded Italy just a notch. European markets reacted immediately, but then recovered. U.S. futures seem to be playing a wait-and-see game with the Fed this morning. Gold and oil are both up slightly in early trading. I'm Deborah Borchardt, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Deborah Borchardt, and we are bringing you the morning call. Scott, every morning we get here, lots of headlines of lots of stuff going on, and the key here is to start to put away all that noise and find the stocks that really traders are wanting to look at and that they can make some money off of.
I think that's exactly true. Yesterday we walked in, we were down 20 handles. Dow was down 200 points. Everyone thought the world was coming to an end. And really, it was just one down day after 5 days of gains. And then all of a sudden, about an hour into trading, those key stocks that we've been finding relative strength started perking up, going positive. And then by the end of the day, the market paired its losses. And now today, we're up 8-9 handles in the futures with all these crazy, nasty headlines. But those looking to make money, those looking to actively manage their portfolios are doing very well right now.
Right. As we saw, Standard & Poor's downgraded Italy. I guess, I don't know what took them so long, but so they downgraded Italy, and that market recovered. So they recovered. So here we are. We're getting into this Fed meeting for the next couple of days. We're going to see what's going to happen with some of these stocks. But we do have the sectors, and some did not perform that well yesterday, but some did. So let's go through them. Okay,
we're going to go through the sectors as soon as we go through the chart of the S&P.
Okay.
Right now, you mentioned Italy. If you remember, I think a week ago, France, banks got downgraded. It was priced in. So last night when I was home, we were down 10 handles in the futures last night. I have a lot of longs on right now. And I'm like, I hope they priced in Italy. And it looked like they did. So if you look here at the chart of the S&P, you'll look at exactly what we're talking about. It's like the little market that could. You had a low, a higher low. This was last week's reversal. We came back to the highs, needed a rest. And then yesterday we held that 1188 to 1192 level. Let me give you a closer look. That was a level I was saying that if we could hold here, this is constructive. We will now be in the middle area of the range, and now it'll be interesting to see whether the SPX can take its 50-day moving average back and then maybe even go up and retest the neckline of that head and shoulders pattern, because right now, you're seeing constructive average, action in the S&P. The Qs are already above their 50-day moving average, and the NASDAQ held 2,600, which was important yesterday. So we're seeing some constructive action, and we're seeing even much better action, if we go into the sector spotlight.
All right, so let's do that. Let's look at our sectors. Let's go into the financials. Now, the financials have not performed well at all, Scott.
Yes, well, the financials don't even need a mention here in the sector spotlight because they're just laggards. The XLF held 12. What we'll do is for you guys, we'll talk about the best acting stocks that you guys should be watching. And obviously, that's Apple, Amazon, and you know what? Priceline could join the party. So if we go into Apple first, you will see here, Apple, we talked about it so many times. Okay, this was one buy price, here was another buy price, and then it opened up down $4 yesterday, traded through Friday's high, traded through the 52-week high, closed strong and is opening up. Amazon also, very quickly doing the exact same thing. No bear market in these two stocks. And now with Priceline, it does look like, I know I don't really trade this. It's very sloppy. It's a stock that's, wide in price, but this could break out. I still think you have a viable area here in Priceline. If it can get above this 540, 545, you're going to see new highs here in Priceline.
Right. It looks like we got a lot of consolidation going on there in Priceline. We don't have it in Chipotle. Gosh, that stock, it just seems to keep making those highs.
Well, Chipotle was something we talked about yesterday.
Right.
Pricing and timing. Tight pattern, looking good, broke out. If you look at CMG right now, there's a line around the corner everywhere you go. This is what we call a day to love. This was that breakout day. This is a day where we went to new highs. Now we're going to see some continuation. If we talk about a tier 1 through 3 approach, here's your tier 1 as it gets ready. Here's where you add for that breakout. And if you did so yesterday, like a lot of guys on my floor, you got paid.
I'm a little concerned about Chipotle. There's a lot of insider selling. What do you do when you hear news like that on a stock that's flying high?
Well, you watch the price action and then maybe you don't put on as much. But for me, I'd rather watch the price action against the headlines. And right now, Chipotle is in vogue. It looks like it's going to make new highs. It's on that go-to list.
Now, we mentioned financials and how awful they are, but MasterCard and Visa are the two financials that are just winners.
Winners, they are above their moving averages. They've tried to break out. They've had success. If you look here at MA, one of those go-to leaders, looking higher above the moving averages, always like that. It's held this recent uptrend. Stick with that and stick with Visa, and don't play the other financials unless you really have to, and I don't even know why you would have to do that.
All right, well, if you're a player, then you might be going to Macau, and if you're going to go to Macau, you might go to a Wynn casino because they just got their approval to go there. That's where all the gambling is, and that stock seems to be responding to that news.
Yeah, well, Wynn has been on the go-to list, acting well. Yesterday, it cleared our bull flag macro pivot. Take a look here at Wynn. Wynn is the class of the group. Love tight patterns. Right here it was tight. A lot of guys were in a tier 1. Yesterday they added for momentum. This looks like it's going to go back to the highs. LVS in that same group. Talked about it so many times. Look how this cleared. Nice trade yesterday. Cleared 48 on his way to 50. I mentioned this whole pattern here, this consolidation for almost 10 months. That means institutions are buying, buying, buying. Now we're starting to clear. This should be new highs. And I'm even willing to mention a laggard. Okay, I hate laggards in the market because it's so hard to make money, but even MGM right now has a decent setup. It's trying to break a lower wedge. You know, I'm long some of that. I think you buy it up to about 11.20. This could easily play catch up to about 13.5.
All right, well, one group that is percolating is coffee stocks, and we're going to talk about those coffee stocks after the commercial.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trades from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, you know, we got to take off those glasses.
Scott, I mentioned we were going to talk about those coffee stocks. Now, I'm a little concerned because some of them have done so well that it could be a bubble, right?
Well, a lot of people talk bubbles. Usually they mention a bubble when a group's acting really well, showing relative strength. I still think there's a lot of legs here. We just had a correction in the markets. Everyone's throwing the kitchen sink out, and these stocks look really, really good. Yesterday, they outperformed the market. Dow was down 100 points, and these were all green and on the move.
Talking about green, let's talk about Green Mountain Coffee because that one is doing really well. A big buy off of the whole K-Cup Keurig trend that we're seeing. PE is kind of high. It's like 65. That's a lot for this type of sector.
Well, usually the best moving stocks have a high PE because this is the growth area. Listen, I have one of the Keurigs. I just got one for my vacation home. It's unbelievable. Changed my life a bit. You know, if you look here at GMCR, you will see, look how close to the highs this is. It's above all the moving averages. I would say today, I'll even put some money on because I'm probably going to be trading it. Above 114, you're going to see a high or new highs or a very nice move to new highs. This is a leader. This really looks good. At this point, I don't care what the PE is.
All right, well, a new player to the whole coffee game is Dunkin'. Not new to coffee, but they're new to the public market. They've only been out, you know, for a short time. The stock has been a little iffy, but it may start to be bubbling up, right?
Yes, I love Dunkin' Donuts, by the way. You can't tell by the physique, but the stock has now been public now for about 6 weeks, or even more. So that's when you get some institutional interest. That's when you get a new base. That's when it becomes an investment. Besides that 1 to 3 day awesome strategy we put together to make money as a trader. So if you look at the chart here on Dunkin', you will see that, you know, it's been public for, you know, what, about 6 weeks. This was that first 3 day move. It's then been consolidating, institutions getting the stock out of the way from the selling group, the investment bankers, whatever.
They came out some bad news and you saw that move down.
Okay, but it still held, you know, this 25. It couldn't even break the first day price. And then yesterday it went above 27. This is a technical buy signal. I think you could buy this, put your stop in at 26, and at some point it's going to be retesting the highs from the IPO week around 31, 32, and it could even go higher than that.
All right, well, there's room for a lot of players in the coffee world. Starbucks is one of the kings. Everybody seems to be willing to pay lots of money for a premium cup of coffee, and that stock is responding just as well.
Yes, it is. And if, you know, you have the new guy on the block with Dunkin', then you have the old dog in Starbucks, all of them acting well, then you also have the high PE and GMCR. So this group is actually one to be caffeinated with. Anyway, look at this move yesterday. I would have liked to have talked about this yesterday, which we didn't because above 39, unbelievable trade yesterday while the market was down. It should continue. This has rewarded investors who are stock pickers. This goes to show you, look where this thing came from, all the way down to 20 bucks, a year or so ago at historic highs. It shows you could be a stock picker, investor in the right stocks, as well as a trader. So if you were an investor, you made money, and if you played a breakout yesterday, you made money. Just got to pick out which one you want to be in this market.
Right, and fundamentally, they had new revenue, lots of growth, so they're doing a lot of things right now. When we talk about Caribou, though, again, insider selling, kind of a bit of a rich PE for that kind of situation. But what do we do with something like that?
Well, this, I would say you just trade a little less. I just looked at the chart for the first time in a while. It actually looks pretty good. If you take a quick look here, this is what I'm looking at. You had a big move from $9 as high as 17. Now it's trying to consolidate higher. If you take a closer look, you will see that there is a downtrend right now that we're going to be trading against. It's above the key moving averages, showing me relative strength. This starts to get above 15 or so. I think you could be a buyer for a quick move to 16. And this is in the game for new highs. If you buy it around 14 or 15, just put your stop in at 13. This is recent support.
Yeah, I would say that's a good idea with that stop, because if it breaks to the downside, it's going to really spill that coffee. If it breaks to the upside, could be good. So let's go to the quick hits, Scott, because there's, as you mentioned, some of these names that are doing quite well in this market. And of course, there's the fan favorite LULU, and then CROX. Who would have thought CROX would be doing so well?
Guys were pounding the pavement on CROX at 12 bucks, and I was like, all right, it just came from 4, and now it's like in the 20s, acting really well. If you take a quick look at CROX, CROX just started to break above this recent downtrend. It broke above 28. I like it technically above all the moving averages. Could see new highs. You mentioned LULU. LULU had a soft, earnings announcement, took it in stride, trending up. Look at this nice uptrend, low, higher, low, higher, low, higher, low. Broke above 60, showed relative strength yesterday. I still think this could see new highs. And I'm not going to show you the chart, but I also think you should check out DECK. D-E-C-K is also looking good. So there is some strength in retail.
All right. Well, as you mentioned, with LULU, everybody loves this company. They feel like they're doing all the right things. But with Netflix, a lot of negativity around that one.
Well, Netflix is like playing with fire right now. Netflix was on the go-to list, and then when it broke that yearly uptrend, it changed composure. And that's something like you talk about PEs, and that's okay. But when Netflix was argued as one of the best companies, high PE, who cares until they care? And then once it changed character, then you have to get out of the way. And every rally we had over the course of the past 2 months, it didn't rally back with the other go-to stocks, and it showed you it got weaker. Now, if you look at Netflix, yesterday was a crazy day. You had that pre-announcement, and it hasn't found a friend. It was a good buy early on, and then guys got short when it broke below the 154. We said use this as a pivot. Now it's like the same thing. For the investor, I would avoid. For the trader, you're making money trading these ranges right now. I would just use this now 142.59 as a pivot for both long and short. If it goes below, comes back above, you're a buyer. If it stays above, goes below, you're a seller. But for investors, just beware.
All right, let's talk about Google. There was a lot of noise yesterday about Google, that they might get called in for some kind of antitrust, and, having to talk to the government, and that's always a negative item. But let's talk about the stock. Let's look at the chart and see, how you trade around that.
I like Google. And Google, it triggered for me 2 days back when it got above 532. There are also some positive things. You talk about the Google Wallet, where you could use your phone and just pay that way. There's a lot of good things going on with Google. And on a macro level, Google hasn't done enough. I think this stock should be a lot higher. It has some technical room, which I'll show you right now, to about 555, 565. This was that lower wedge I was talking about. It broke above. Let me actually show you a little bit closer. And then yesterday it retested. I think this stock easily can get between these two moving averages up to around 560. And at some point, if the directors would ever get their head out of there, they would split this stock 4 or 5 to 1 to make it easier for institutions to own, easier for traders to own, easier for the investor to own. Look what Baidu did. It split 10 for 1 when it was at 700. It's now at 1,400. Google's in the exact same spot. They need to split this stock in order to make new highs.
You're right. You get these $500 stocks. It's really hard for a smaller investor to take part in it. They just feel like they can't get as much for their money. Let's talk about the industrial stocks. People have been very disappointed in them. Cat and Deere, they have not seemed to respond very well.
These two stocks, everyone asked me to look at them, and every time I look at them, I'm like, okay, but, because they're not showing relative strength. And if you look at both of these, after some of the charts I just showed you, look at Caterpillar. it's near the lows. It's hovering, hanging on to this 80 level by a thread. So I guess if you had to be long because you're a fundamental player and you like low PEs and you don't like the big ones like I just showed you, you could buy some Caterpillar around here, use your stop at 80, and if it starts to get above this little trend line here around 87, perhaps you could see it move back to 92. It does move fast when it wants to. Just being small, this is right now lagging the market, and Deere is as well. Same thing, it's actually a little bit off the lows, acting better than Caterpillar. And I guess if it were to start getting above this pivot, it could get up to 85, but right now both of these are not where the fast money is.
All right, let's talk about CF. You've got that as one of the stocks that you wanted to look at. It seems like it's pulling back off its highs.
Well, CF, I think in the ag group, I like it. CF, potash or potash, however you want to say it, are the two favorites in that group for me. I think you buy those if you need to be having some exposure there.
All right, well, as we mentioned, there is a lot of noise going on in the market right now. We got the Fed meeting starting today, Operation Twist,
Right.
Operation Twist. So it looks like some people are on the sidelines and kind of waiting to see what's going to happen there, even though we don't think a lot is going to happen. But, it is creating a market where things are in a pause. And
Right.
so it's hard to tell, to get away from that noise and find the right names.
Well, I feel like we're never going to have the green light. There's just too much going on in Europe. There's too much going on here. There's never going to be like, okay, here's your green light, go, dive in with both feet or both hands, however you want to put it. But every single day, stocks are starting to break out. IBD has had us in a confirmed rally now for over like 3 weeks now. It's starting to build. We're starting to get above the upper end of this lower pivot in the S&Ps. If we can take back the 50-day, I don't really care what the Fed says. The market's telling me we could see higher prices. I want to keep listening to the market. I want to keep, every time we get these crazy headlines, let's see if we take it in stride. I still think Greece is a problem. I think the pigs are a problem. I think Washington's a problem. But these high beta, relative strength stocks are a solution.
All right, well, keep watching the morning call and watching those charts because you will find some stocks that are doing well.
Yes, and just tune into the recap as well. We'll tell you about what worked, what we're looking at the next day, and have a great day trading.